What if I told you there is a proven strategy that turned a few $1,000s into millions? And it's so precise, it tells you the exact day to buy a stock. This isn't theory, it's Mark Minervini, who won a national trading championship with 155 return in a bear market. Want to know how? In this video, I'll break down Minervini's powerful momentum system, show you how he finds winning stocks, and reveal the secret behind his specific entry point, which is called SEPA, the moment smart traders strike. Even if you are just starting out, you will understand it like you are 12 years old, and I mean it. Stick around and you'll know what I'm talking about. This is Galaf Alonzi from Stocks and Stories to YouTube educational channel, and I'm going to cover VCP components in a nutshell. We know that Mark Minervini trades VCP pattern. If you don't know who is Mark Minervini or what is the hell of VCP, please check out my educational, informational video about VCP and Mark Minervini story in the comments section, as well as in the description box. So let's get back to our video. The VCP pattern consists of 4 main categories. So in order to master the VCP trading strategy, we have to master all of these 4 components. The first one is SEPA system, the specific entry point, what to trade and when to trade it. The second thing is the trend template, what to look for in a stock technically in terms of technical indicators and its price. Where is it from the 52-week high and the 52-week low, etc. The third point is the growth focus, what to look for in a stock fundamentally. You're not gonna have to go over the sheets or financial sheets of the company, but it will give you what to look for in general in terms of sales, growth, and sales margin, profit margins, and so on. The fourth component of VCP is the risk management. When and where to sell, where to place a stop loss. This is very important for you, because if you do not know how to risk manage your portfolio, you will never be able to earn money or make money, not even not in any other trading setup, not only with the VCP. So this part of the VCP components will deal with how to trade, how much you should buy from your portfolio, when to sell it, where to sell it, etc. In this video, I'm going to cover the first component, which is the SEPA system. The SEPA system, what to trade and when to trade it. SEPA system use specific entry point analysis to identify optimal buying opportunities in stocks showing upward price trends, improving fundamentals, and a catalyst for wider market attention. This is a general definition for the SEPA system, and I will look deep into it in the following slides. So hang out and we will go deeper into the VCP rabbit hole. So here is the next slide. SEPA system has 3 main components. SEPA focuses on stocks with 3 clear signs. Number 1, upward price trend. The stock is already going up over time. You can see on the chart attached to this slide, it shows a successful VCP pattern which was traded by Mark Minervini himself. And we can see that the stock was already on an uptrend for a longer period of time, more than 4 months, and the stock was MELI. In 2007, this VCP pattern was happening in 2007. So the first component of the SEPA system, the stock has to be in an upward price trend. Like, for example, like a rocket preparing for launch. It's already showing strength. Example, imagine a toy's price in the market is rising because everyone loves it. That's a good sign. It's in demand. So when we see the stock is already going up, we know for sure that there is a demand for the stock. Let's move on to the next slide. The second point of the SEPA system is improving fundamentals. As I noted early, the stock should has a good financial data. The company is making more money, getting better at what it does. Things like more sales, higher earnings, and strong profit margins. For example, if a lemon stand starts selling 50 cups a day instead of 10, and it keeps growing every week, that's improving fundamentals. Next slide of the SEPA system, and the last point is the catalyst. Number 3, a catalyst. The stock has to have a catalyst, a reason people will notice the stock soon. For example, something new or exciting, like a new product, like Apple launching a new iPhone, a big contract going viral in the news. Example, a small bakery starts selling online and suddenly gets featured on TikTok. More people see it, buy from it, and its business jumps. So we have to have a catalyst in the stock that we are looking for, even according to Mark, even if the stock is placing a VCP pattern, but it does not have a catalyst, we should not classify it as a safe entry or a correct VCP pattern. So we have 3 components. Let's go over it again. We have 3 components for the SEPA system. Number one is the upward trend, price trend. Number 2 is the improving fundamentals. And number 3 is the catalyst. I'm going to show a simplified example for what I just said. Real world example, simplified. Let's say a tech company's sales doubled this year. That's fundamentals. Check. Its stock has gone from $20 to $50 in 6 months. Price trend. Check. It's launching a new AI app next month. Catalyst. Check. The stock cools off and moves sideways at 48 for a couple of weeks, forming a base. Then one day it jumps to 51 with a big increase in buying. That's your specific entry point. You enter at 51. So this is example. You cannot just apply what you have read blindly. You have to train, exercise, and spend more time learning about the VCP before applying and trading it with your portfolio. So this is very simplified example for the simple components of the first part of the VCP pattern, which is the SEPA system. Let's move on to the next slide. Now, how do we know when to buy? That's where the SEPA becomes powerful. Specific entry point, the exact price and time when a stock pulls back slightly, rests, as you see in the attached picture. In the attached chart, the stock pulls back more than once, but one pull of the pullbacks placed a great entry point, and this chart this chart with notes from Mark Minervini himself. He wrote these highlights and notes on the chart. He traded it and he made money on it. Then starts to move up again, wakes up strong. Imagine a stock climbs, then pauses for a few days or weeks, makes a base, then it breaks out from that base and moves higher. That's your buy moment, and this is exactly shown in the picture here in the chart of the stock MELI in 2007. The stock pulled back more than once, and one of the pullbacks that it did, the volume decreased and shrinked, as Mark says, and it formed a new base. Then it just climbed and break the previous top to a higher prices and higher bases. Now, what such tools we use to spot the entry? Number one is charts, like a map showing price movement over time. Base patterns, like cup with handle or flat base, places where the stock rests. For example, I'm going back over to the chart to describe this point. Here the stock pulled back and placed a base. This is called base, and this is another base, and it's coiling and preparing for another move. It just like a stock, just like a rocket, cools off before launching to a higher target. And also always look for the volume drop before the breakout to be valid. Pivot points, the price where the stock breaks out of the base and moves strongly up. Volume, we look for more people buying. Big spikes, strong interests. We can go back to the chart and see this volume is spiking up with the breakout. This is a very important factor in a strong and a valid breakout for the VCP system. Now, the SEPA system, and this chart, this slide is very important to tell you why should we learn a lot and why should we learn more about the SEPA system. Why SEPA works so well. You avoid guessing or chasing hype. So the SEPA confirms that you should look for some fundamentals, technicals, etc. That it will filter out most of the noise, most of the hype. It will filter out so many false stocks and false VCP patterns. You buy when the stock shows real strength with data and mining. So it gives you exact timing for the best entry to the trade. You limit risk and maximize the chance of big gains. So when you enter just right before the breakout, you will increase the odds of you winning that trade. and lower the risk for losing money. Summary for 12, this is an additional explanation to make it very simple for you guys. Summary for 12 years old, SEPA is like finding the perfect time to buy something popular right before it becomes even more popular, using clues like, is it already loved? Is it getting better? Is something exciting about to happen? And is it just about to move again? So here's what you know. Mark Minervini only bets on strong stocks, the one already moving up with the solid fundamentals and a story that catches the market eyes. This is Khalaf Alonzi from Stocks and Stories 2, a YouTube educational channel. Make sure to follow the channel for more educational content. So Mark, then he waits for the perfect moment, the specific entry point, when the odds are stacked in his favor. This isn't gambling, it's a momentum trading with the military's precision. Master it, and you might just catch your own millionaire move. Thank you, and I'm looking forward to see you in another video. Bye-bye. Fellow traders, hello again. Before a stock breaks out and makes its big move, it gives you signs, quite signs. This is what the pro sees and the crowd misses. What if I told you there's a template in a checklist and that filters out the noise and locks you into the strongest uptrends before they explode? In this video, I'll walk you through the 7 Elliott criteria from Mark's Minervini trend template. These are the signs that tells you this is not just a stock. This is a potential leader. Let's decode the signal. So, in the first video, I've covered the whole SEPA systems, what to trade and when to trade it. If you don't watch the video, you can check the list in the description box or in the comments sections. In this video, I'm going to cover the trend template, what to look for in a stock technically. Okay, so there are a couple of indicators or signs that we look for when we want to trade a VCP, a good VCP pattern. This video is going to cover the trend template, the technically things, what to look for. So before I begin, here's the disclaimer, and let's dive into the 7 signs that we should look for. Number 1, price is above the 150-day and 200-day moving averages. Shows medium and long-term strength. Indicates that the current price is supported by recent bullish behavior. A stock trading above its 150-day moving average isn't just healthy, it's showing dominance. This tells us it's not in a confirmed uptrend. A trait of Elliott price action. This tells us it's in a confirmed uptrend, a trait of Elliott price action. It reflects that the majority of recent price action is positive. If the stock dips below the line, it means strength is deteriorating. For serious traders, this is not optional. It's non-negotiable. The 150 MA is a midterm trend line that reflects the rhythm of institutional confidence. Stocks stay above this line are ready to lead. And here's a chart that shows us the stock price is above the 150 moving average, which is the blue line, as you can see here. The 200 MA is the red line, which we will talk about later, and I'm going to tell you what is this line. Here's a clear VCP pattern, as you can see here, and it rose almost 30% in less than 3 months. Sorry for this typo, it wasn't 300, it was 30%, but the trend was clean and the profit was almost sure. You are 100% sure of the pattern. You just buy and ride the move. This is what's special about VCP pattern. Now let's move on to the second point. All right, the price above 200 day moving average. So it's not only the 150, it's also the 200, and there is another moving average which we cover it later. But let's talk about this one right here. 200 moving averages is trending upward for at least 1 month, confirms long-term momentum is not just flat but rising, filters out false strength. So when we say the stock is above, when we see the stock is above the 200 MA, it filters out the false strength. If the 150 day is the engine, the 200 is the ship keel. When prices floats above both, that's a clear visual of strong institutional interests. Most funds will not even consider a stock trading below its moving 200 day moving average. So we are not looking also only for retail investors, but we are looking for the institutionals and the funds. It represents long-term trust in the name. A rising price above a rising 200 day moving average filters out the noise. You are left with the stocks that have the power to lead. Your edge as a trader increases when you align with that momentum. So we would like to align with the funds and the strong traders and the big hands, like they say. Here is a chart of a stock. A successful VCP pattern took place in 2024, so it's not far from here. And the stock rose almost 30%. And as you can see here, it was above the 200 and above the 150 and above this line, which is an additional moving average, which we will cover here in a second. So this is the confirmation for all. You can almost never find a successful VCP setup that is not above these moving averages. So let's move on to the third condition. The 200 day and the 150 moving averages are trending upward for at least 1 month. Confirms long-term momentum is not just flat but rising. A stock isn't just strong because of where it's now. It is strong because of where it's heading. So we are counting on the future when we see the stock has two strong moving averages that are heading up. So we already have a glance about what the future looks like for that stock. The 150 MA trending upward shows acceleration. This is a stock gaining ground, not just bouncing. It's a clean signal that confirms the trend. Visualize the line sloping up. It's the DNA of winner. Without this, you are just catching noise. Let the trend guide your timing. Riding an upward sloping 150 MA is how traders build consistency. Let's move on to the next slide. So we need the both of trends are trending up. Not only they are the price is above the both MA. So this is the third condition. We have to see the price that we have to see both of the MAs 100, 150 and 200 are trending up. As you can see here, this is the 200 MA and this is the 150 MA. They are both heading upward. So even with a slight angle, not too much like this one, but it's already heading up. This is the breakout here, and if you cover this side, you're gonna see those MA are heading up. This is your long-term safety check. The 200-day MA trending upward confirms that the stock isn't just temporarily strong. It has been advancing for months. It ensures the big money is staying in. This isn't speculation. This is participation. When both the 150 and 200 MAs slop upward, the whole structure supports the breakout. The longer the trend holds, the more reliable the setup. The chart becomes your ally, not your opponent. So we already covered 3 points of the technical requirement for a good VCP pattern. Let's move on to number 5. 50-day. So here's the little secret that I've been keeping from you for the last 10 minutes. So the purple line here is the 50-day moving average. And this condition is very important. We should see the 50 moving average is above the both 150 and 200. And as we can see here, the purple line, which is the 50 MA, is way far above the 2 MA. So it's not only above, but it's way far above the 2 MAs. Now the short term joins the long term. When the 50-day MA rises above both the 150 and the 200 MAs, it signals acceleration. This crossover shows a shift in strength. It is not just that the stock is climbing, it's climbing faster than before. Think of it as the market tipping its hand. Institutions often load up after this crossover. It's a strong visual confirmation that momentum has been building and it's picking up speed. So it's not only us, it's the institutions who value this crossover when the 50 MA goes above the 150 and the 200. Let's go for number 5. Number 5, 30% above 52-week low. So we have to have the stock above the 52-week low, and 52 weeks stands for a full year of trading. So as we can see here, the stock is not only 30% above the 52-week low, but 70% above the week low before, just right before the breakout happens. It was 70% of the 52-week low. This is not just about price recovery. It's about proving strength. A stock that's 30% above its 52-week low has momentum. It's not stuck in the mud. It's leading the pack. This ensures you are not buying dead money. I like this word from Mark Minervini. It's a way to avoid traps. Stocks that bounce 10% but fade at 30% of the low, you are seeing a real trend forming, not a fluke. That threshold separates from reaction. Leaders show up here before headlines do. So we have to have the stock above the 52-week low before the breakout. Let's move on to point number 6. Point number 6. The stock should be within the 25% range of the 52-week high. The 52-week high is the yearly high of the price for a certain stock. And we can see here that the stock were only 6.5% off the 52-week high. So while the pattern was forming, it was not far from the 52-week high, even less than 10%, which makes the stock stronger and ready to make a new high after it breaks out. Leaders hang near highs. Stocks that hover within 25% of their 52-week high are typically basing, not breaking. This is sign of controlled power, not exhaustion. It's a breeding ground for breakout. Buying close to the highs may seem scary, but that's where the bros play. If it breaks out from a tight zone near its high, the stock has strength to run. You're not chasing, you are confirming. Now, let's move on to the next step and the last one in the trend template for a successful and strong VCP pattern. The seventh point is relative strength to the market. Relative strength is a technique used in investment analysis to compare the performance of a stock or other security against a benchmark, often the overall market or a specific index. It helps identify whether a stock is outperforming or underperforming. I brought a chart to show you what this exactly means, but let me read the additional information to explain more about this metric. Relative strength is one of the most powerful metrics in the market because it reveals a stock's performance leadership, not based on hype or news, but on actual price action over time. When a stock has a high RS score, it means it's outperforming other stocks across the market, demonstrating strength, demand, and momentum. This isn't just technical, it reflects the psychology of institution, piling into strong names while avoiding laggers. RS helps traders and investors focus on what's working now rather than chasing old stories or bottom fishing weak setups. Instead of guessing where strength might appear, RS show you where it already is. It often identifies emerging leaders before major breakouts or media attention, making it an early clue to potential winners. Importantly, RS compresses price and time into a single signal. You are not just looking at how high a stock has gone, you are looking at how efficiently it's moved relative to everything else. This sharpens your edge. In a noisy market full of opinion, RS is a pure math, and it does not lie. If a stock cannot outperform now, it likely won't outperform when the next wave hits. RS filters your watch list to the real contenders. Let's move on to the chart that explain what RS is. And here's the same chart. Here's the same VCP pattern that I brought to you from my so many setups that I'm saving in my desktop, and I will share it or explain more in the future about it. But for now, you can check out the setup. Here's the breakout, but before the breakout happens, look here on the green candle, on the green circle here, and the SP 500 on the red candle. And you can see the relative strength, very, very high relative strength to the market. While the SP 500 is dropping, the stock was going up so aggressively. against the down market. So this is what a relative strength is. The stock should has some relative strength. This is the top signal for being strong against the market. We know that 70% of stocks goes with the market, but when you see a stock that goes against the market, the stock is going up while the market is going down, this is a pure signal that this stock holds a story inside of it. Hopefully I taught you something useful in this video. Make sure to follow my YouTube channel, and I'm going to dive into VCP setup along with other great setup among the top traders in the field. Thank you, and bye bye.